Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. We continue with part 2 of our discussion with natural resource businessman Ross Beaty. Ross, thank you for agreeing to come back for more.
My pleasure, Andrew.
Ross, so why is mining important, not only from an economic perspective, but aren't things we grow and dig out of the ground required for all of human survival?
Well, of course they are, Andrew. Minerals are a fundamental part of our industrial society, and unless we want to go back and live in caves, we need minerals. It's just the way it is. Whether we need the amount of minerals we're digging up today, or the amount of energy we're using today, or a smaller number is not really the point. We definitely need minerals, and they have to come from somewhere, and I'm in the business of providing them to society.
Well, let's go to the mining business, Ross. What is lacking in the business today from your viewpoint, and what things really need to change?
That's a very big question. Things are changing. Things are changing actually very quickly in the mining industry amongst the more public companies. They aren't changing so much with the private companies and the small local companies, and particularly of scourge today is the millions and millions of local people in different countries in the world who are mining illegally, very primitively, and with tremendous environmental destruction that's going on. So the world of kind of public companies is having quite a revolution in terms of its focus on not just mining, but how to mine as well as they can with as small an environmental footprint, with as little CO2 as possible, CO2 emissions as possible, with as good environmental and social governance as possible. And there's a tremendous effort being made by companies that are large and medium-sized public companies, because investors demand this of them. Investors demand this, local communities demand it, environmentalists in those regions that those companies are working in demand it, and banks demand it. So it's just part of being a good corporate citizen today. And actually, if you look after the environment and your social situation, those communities and the workers that you employ, you actually make more money. It's a direct line to the bottom line. And if you don't, you get into a mess. People blockade your mines. You might have spills, and that costs a lot of money. You have health or labor problems. You have strikes. You have fines from local governments if you have a bad safety record. So it's just good business to do this. The part that bothers me is where you have in many countries a sort of a double standard. You have tremendous regulation and scrutiny on public companies working in those countries, multinationals or otherwise, and you have very little scrutiny on domestic companies who are doing really bad things to the environment and not very good things to their employees and the communities, and yet they just seem to get away with it. It's just the world we live in. We have these double standards, but from our business standpoint, you do what you can. You work as hard as you can to be a good citizen, corporate citizen, and at the same time, you try to make a living in the mining business. It's a tough world today, and it is changing quickly.
Well, Ross, I want to move over to jurisdictions for a moment. Can you give us a few countries you've not been to? And while you're thinking about that, many places around the world can be outright nasty to be in, let alone trying to operate a business in. So we've seen many unfortunate events in the mining business, whether it be health and safety, security, unrest, take your pick. It really is reality out there. If you are willing, can you tell the audience about a notable event that was of significance to you in your time overseas, maybe in the younger days, some kind of an event that really caught you thinking about life and thinking about safety and well-being?
Oh my goodness, Andrew, I could go on for hours. I mean, I've had both the great fortune and I've chased it myself, so it's not been just luck, of working internationally all over the world, like everywhere. Pan American itself, my silver company has operations in 5 countries, my gold company in a couple, my renewable energy company in half a dozen. But I've had investments just about everywhere in the world. And I've worked personally just about everywhere in the world. I've been to more than 140 countries in my life. And I kind of just chase this because I love to travel. I love to see different things and meet different people and try to understand how people work. Because mining is a global industry, you can't choose to put your mine in a nice place, you kind of have to go where the minerals are. And I've chased that very actively. So I've had crazy experiences. I've had a lot of near-death experiences in riots, helicopter crashes, plane crashes, all kinds of getting, cerebral malaria, just about dying, getting toxoplasmosis and having just about dying. Like a lot of nasty things have happened to me, but here I am still alive, and I'm kind of more, I guess, richer for the experience. And generally speaking, it's been successful. Generally speaking, I've had pretty positive experiences where I've worked. I won't say, you asked me to single out one. The one that comes to mind most quickly is having basically wasted 4 years of my life working in Russia in the mid-90s, soon after we got Pan American Silver going. There was a huge, one of the world's biggest formerly producing silver mines in eastern Russia and Siberia that was being auctioned by the Russian government. And we bid and we won the auction. And then we spent 3 years, about $35 million as part of a $135 or $140 million capital program to get the mine going again. And it was going to be a really world-class mine that was going to position Pan American as the world's leading silver mining company. So it was a high-reward project, rather low technical risk, but a lot of country risk. And unfortunately, the country risk bit us. We took the project right through, feasibility into construction. We had all our financing lined up, World Bank and other banks lined up, and we put our fair bit of money in ourselves, about $35 million of our own equity. And we were a small company then, and every penny of that we had to raise with difficulty. And then, just to kind of make a long story short, we were attacked by a Russian company, and they stole the project from us. They absolutely stole it, and we kind of were so sick of working in Russia by the end of that 4-year period that we kind of just said, okay, you can have this, but we want to get our money back. And we ended up getting about $40 million of more than we eventually invested, but we wasted 4 years of our life. And that was a case where really the kleptocracy in Russia, it did bite us. And I don't regret the money so much. I regret the time that I wasted working there. It was a tremendous opportunity cost because we could have perhaps done better had we focused, say, on Mexico or Peru, which have much, much more pleasant places to work. They don't have that overhanging threat of somebody just basically stealing a project from you. But this was the case of Russia for most of those years. In fact, it still is today, just how hard it is to work there, what a difficult investment climate is. And that's basically why no mining company worth its, no foreign mining company except one or two work in Russia. They work elsewhere. That's definitely the worst experience, but boy, I've had a lot of great experiences too.
Well, I appreciate you sharing that story, and Russia is certainly an interesting case, and not too many people try their hand there, even those that are people that can take on these hard jurisdictions, and you're certainly one of those people that has been able to accomplish that throughout your ventures. Well, I want to move to Central and South America for a moment. So we've got challenges with some countries here. Venezuela is an outright train wreck, and sadly, you've got ice starting to crack in places like Nicaragua, Guatemala, Honduras, and El Salvador. Bolivia has always been of an experiment. Now you've got a few protests popping up to correct irresponsible government actions. What jurisdictions do you like in this region now? And are you of the opinion, Ross, that when it comes to mining in general, that governments get grabby at the tops of cycles and they come back with open arms during bear cycles?
Oh, yes, no question about that. The world sort of does work in cycles where, you get a period of high commodity prices, companies are making money, and governments want to grab a bunch of that. They make the grab just as the cycle turns, and companies have to flounder and just try to survive when the market goes down. Countries make even less tax revenue than expected. They realize, they've killed the goose that lays the golden egg. Let's try to revive the goose and get it going again. And so the cycles kind of repeat themselves. It's just one of those difficulties in our business. And there's a lot of difficulties. Mining is a very, very risky game. And I've worked all over Latin America, every single country, directly or indirectly. And I can say, from my standpoint, you can't be too choosy about country, because sometimes you have a country that's a train wreck, the way Peru was, say, during the 80s. And all of a sudden you got a strong president, they clean house, they change the laws, make it more investor friendly, which is what Fujimori did in Peru in 1992. And all of a sudden the country turned from being a pariah to being one of the most successful places to build and operate mines in the entire world. Literally for the last 30 years, it hasn't changed, or 25 years. It's still a great place to work. So you can't you can't be too picky. Bolivia has had a terrible reputation, and yet we've had a mine there now for 20 years. It's been a very successful mine. We've pulled a lot of good dividends out. We've invested a lot of money. The mines run well. The people have worked well for us. My strategy is basically trying to have a diversified portfolio so that you can have one year, one country might be tough and another country might be good, and the next year might be the exact opposite. But there have been times when even countries like Canada and Australia and the United States have made it very, very difficult for mining to succeed. And other years, they're exactly the opposite. So you really have to take the long view, be diversified, and try to work inside the system instead of, rebelling against it. But everywhere in Latin America, I could reel off the countries that have been good and countries that have been tough. I'll say Argentina has been tough, even though it's a wonderful country. It's just a real tough place to work. It's for all kinds of reasons. Chile used to be wonderful. Now it's really getting more difficult. It's getting more difficult for a number of reasons. Brazil was more difficult 5 years ago. It's easier to work in today. And so, as I said, that's the strategy that's worked for me, and I'll keep doing that. I tend to focus in Latin America now because I really know it well and understand it. I'm not much of an Africa hand. I wouldn't go near the Russia Federation countries. China's tough for me. India's tough. There's a lot of places that maybe it's just my age. I'm not as risk accepting as I used to be. But the Latin America's been wonderful, and I'll go there any day of the year, except Venezuela.
Well, I want to cover one more. So the Lumina Group, as you know, has a significant foothold in Ecuador. Do you find the opportunity in Ecuador similar to the time when you started to invest in Peru in the early 1990s? What are the key parts that really checked all the boxes at Ecuador for you?
Yeah, that's kind of the way Ecuador was when we first got going there, and I think it was 2015. The gold price was low. Ecuador had been a pariah for 10 years when the government made laws just impossible for mining companies, changed the investment climate from what had been quite good to quite bad. The country itself has a fabulous mineral endowment. It has gold and copper and all kinds of metals. It's very, very rich in minerals, but it's had no foreign investment. So there were wonderful opportunities for companies that were prepared to take a bit of risk, and with a new president and hoping that things were going to change back in, say, 2015. And so we went in there and we acquired a whole bunch of ground and one gold deposit that was already known. And we've been working there for the last 4 or 5 years. It's been very successful technically, but I have to say the country still hasn't really turned the corner. The government is very supportive of mining. They need mining because they've lost oil and gas revenues significantly from what they were like 5 or 10 years ago. But the local people still are very nervous, I'm going to say. They're very worried about the environmental impact of mining. They don't have any mines in the country of any modern nature. And so a lot of it is just sort of not understanding what a good mine can do for an economy. I mean a mine that's well run. They see the illegal miners that are just ripping apart the environment, polluting it like crazy, and they say, we don't want that. But they don't really know what a modern mine is. Now, luckily, the last 4 years has seen quite a bit of development in Ecuador by different companies. Lundin Gold has a big gold deposit there that's just coming into production now. That's going to be a real bellwether for the industry. If they do it well, that's going to be really great. And then there's a Chinese company that has just finished constructing a large copper mine that's just started production. And we hope that they also have decent environmental and social governance rules that will make that mine reasonably well received by the local communities in the country. So I hope that these demonstrate to the Ecuadorian people that you can have mining that coexists with, reasonable environmental and social policies. But it remains to be seen. Ecuador has a very large indigenous population, and they're quite militant. And so they just about 2 or 3 weeks ago had a lot of disturbance when the government reduced the fuel subsidies, and it caused a tremendous amount of social disturbance, which spilled over into the mineral projects that are happening there. So that was not nice to see. And luckily, the government reversed the fuel subsidy withdrawal, and I think tried to convince the protesters that, they have to get money from somewhere. It doesn't grow on trees, and they can't borrow anymore internationally. They're kind of maxed out there. The Chinese are nervous about lending them more money, and they've got no oil revenue like they used to have. So, they've got to replace that with something, and you just can't give people fuel subsidies without somebody having to pay the price. And so hopefully they're going to understand that they're going to have to change their policies on industrial development and bring in, good international companies that know how to mine effectively and without polluting the environment, and that's hopefully what we'll be beneficiaries of.
Right, absolutely. And certainly it appears that the Lumina Group, one of the top concession holders that I'm aware of, as well as, of course, I think you guys were all at the same place at the same time when Keith Barron was also going after a bunch of property as well. So
Sure.
certainly an interesting set of times, Ross, and excited to see how things progress there with the projects. Now let's move on to some other key topics. I want to ask you about management compensation. Ross, how do you balance compensation during bad and good times in the market while maintaining proper exposure to the talent you need to help run a business?
Well, I have my kind of rant on this subject, which comes from a view that public company market in the mining industry has a flawed compensation policy, generally speaking. So I maintain that a lot of the top executives are overpaid relative to how much, how hard they work, what they do for shareholders. But it's because there are comparatives always done, and companies always try to hire their top executives and pay them according to the average paycheck of the industry. Well, some companies pay their executives a little bit more than that. And as soon as that happens, the average goes up. And it's a sort of this spiral upwards and upwards that results in quite unrealistically high compensation levels. So that's my general view. People are overpaid in the industry. But of course, what do you do if you're running a company like we are with Equinox Gold or Pan American or Lumina, and you want to hire the very best people? You can't pay them the lowest quartile of salaries in the industry. You've got to be competitive. So it's just a vicious spiral, and the people who lose, quite frankly, are the shareholders, because a lot of money gets pulled out of earnings and gets put into compensation and general overhead. Well, if you have 5 companies that are all paying their executives a lot, that all produce 100,000 ounces of gold, instead of having one company that produces 500,000 ounces of gold, one management team getting paid a little bit more maybe, but it certainly isn't 5 times the companies that produce 100,000. You have a lot of money siphoned off into overhead that should more properly, more efficiently go to shareholders. Anyway, that's my rant. I tend to agree with a lot of investors in that sense, but it's a very, very hard thing to get out of now that that's an established industry compensation strategy.
Well, I believe your position is correct, and that's where my position lies as well. When it comes to your capital for this sector and the time it takes to realize value, Ross, what keeps your eye on the prize and a certain positive outcome? Is it conviction, patience, timing, certain market events? What does it for you?
Well, there's no such thing as a certain positive outcome because this industry is so risky. It's so risky. There's so much risk in it. And the risk is both things under your control and it's a lot of things beyond your control. And I'll just give a few examples, like metal price. Nobody really knows what's going to happen a year, a month, a week from now in terms of metal prices. If they go up, the company does well. If they go down, the company is going to do poorly. No matter how strong the management team is, no matter how good the project is, the stock price is going to go down. That's not a successful outcome. But, again, if you have enough diversification in your portfolio, you have enough eggs in enough baskets. If you buy companies that have certain ingredients in common, you're likely to outperform. Ingredients in common include strong management, where you can really trust the people involved to work as hard as they can for shareholders. Number 2, good projects. So I look very hard at the quality of the project. If it's an exploration play, how big it is, what are the risk factors involved, where's the country it is, where inside a country it is, because there's a lot of times it's not just the country, it's the location specifically inside the country that project's at. Some are good, some are bad. I look at the details of the technical reports. I look at the capital that's needed. If it's a small company that needs a huge amount of capital, it's one thing. If it's a small company that needs just a little bit of capital, it's a very different thing. I look at the market cap of the company and say, is it a fair market price or is the stock overvalued or undervalued? There's a whole bunch of factors that go into making an investment decision. And as I said, I mean, you have to take a long view. You have to try to get your timing right in this business. You have to try to look at commodity cycles and sort of say, well, where are you in the cycle? Because when the gold price or copper price goes up, every single company that's exposed to those metals goes up. Some do outperform. Those are the ones you want. But basically, if you get your cycle right, you're going to make money. And if you get your cycle wrong, you're going to lose. As tide goes out, all the ships are left high and dry. So those are some things that I look at.
Would you say that in general, are you typically early, and is that really the best place to be when it comes to timing these market decisions?
Yeah, for sure. You never really know when the market's going to turn, but because we are in a cyclical world, you definitely want to get in there at the lower part of the cycle and you want to get out at the higher part of the cycle. And I can never say when we're at the bottom or the top, but I can certainly say when we're close to the bottom or close to the top. I mean, it sounds simple to say that, but if you go back to kind of my investment horizon goes back, a few decades, and I can just point to times when, there was so much hatred for the sector. There was so many people lost so much money over a number of years that prices were just, companies were trading at such crazy discounts that you just knew it was a good time to buy. It's when nobody likes the sector, when everybody hates it, when there's capitulation all over the place, that's when you want to be buying. It's very hard to do. It's easy to say, very hard to do. But you want to be buying at the bottom of the market and selling at the top when most people are doing the opposite. I kind of tend to follow the Swiss investors. When the Swiss start throwing in the towel, it's kind of close to the bottom. And when they start buying, it's just about at the top. They're just so inherently conservative that they just seem to get it wrong on both ends. But you've got to be courageous. You've got to be contrarian. And that strategy has worked really, really well for me. And I can point to specific times, just even the last 10 years. I mean, at the end of 2008, early 2009, it was a license to print money by investing in the space because everything was free. Everything was cheap. Then the commodity companies just skyrocketed and didn't double or triple. Many of them, including the large cap stocks like Tech and BHP, they went up 10 times. These are large cap stocks. In the space of 2 years, they went up 10 times. That's a pretty good performance for a blue chip stock. And then, of course, 2011 came along. Things were overblown for a whole bunch of reasons. The growth was slowing down in China. That was the top. And gold, hit a top of $1,900 an ounce, just looking at gold as one commodity. 5 years later, by the end of, or even 4 years later, by the end of 2015, early 2016, gold was at 1050. At 1050, what was going on? Gold companies had been crushed. Valuations were super, super cheap. Exploration stocks were free. It was just a great time to come in and buy again. And I did that. I went long on a whole bunch of different stocks, and it was a very happy story in 2016. And then we kind of had some bubbles for a couple of years, kind of lumpy markets up and down. And then all of a sudden we're back in a gold market today. And I just sort of think we're sort of maybe we're in the fourth inning of the gold game right now. I definitely don't think it's the top of the market today. It's definitely not the beginning either. We're sort of mid-cycle somewhere. But I think there's still lots of money to be made by gold interested investors. And if I wanted to invest in other companies, I'd look at copper quite closely. Copper, maybe some of the battery metals now, which are really, really cheap, and pick a few companies and invest in those.
Well, Russ, I agree. And I want to follow on with what we just started to talk about here. I have a list of assets in front of me that I want to speed through, and I want you to state your position with regards to each, either positive, neutral, or negative. You can interchange that for bearish or bullish if you'd like. Let's start with copper. Can you just give us your positive, neutral, or negative view?
Positive. I'm definitely positive on copper at this point. It's trading around $2.60 a pound. The copper market is heavily influenced by what's happening in China, and China's moving from an infrastructure-dominated economy to a consumer-dominated economy. It will use a lot less of all metals than the old infrastructure market, but it will still need a lot of copper, and so will the rest of the world as we become more electrified, as we switch from internal combustion technology to battery technology for cars, buses, and trucks and so on. As we generate more renewable energy, all of this is copper dominant. Uses a much, much greater amount of copper than traditional sources of electricity and transportation. So I really like copper for those reasons. On a global scale, copper could easily go back over $3 a pound. And when that happens, you're going to see that the established copper companies like First Quantum and Tech and companies that have leverage to copper, they're all going to do really well. So copper would be one metal that I would be very bullish on.
Okay, and for the sake of time, Ross, let's speed it through here. Just give me your positive, neutral, or negative. The next one's gold.
Positive.
Silver.
Positive.
Platinum.
At current prices, neutral.
Palladium.
Because it's had a heck of a run. They've both had, well, especially palladium. Sorry, platinum. I might even be bearish on platinum, but palladium, neutral.
Zinc.
Unfortunately, I have to say negative because of the amount of zinc that's in the world, and it's just been a tough metal for decades.
Nickel.
Neutral. It would have been positive a year ago, but nickel's had a pretty good run, and so today I'm neutral. Good fundamentals, but there's lots of nickel out there too.
Water.
Water depends where you are. Generally speaking, bullish, but not everywhere.
Potash.
I'm negative on potash. There's been a lot of new potash supply come in the market, and I think that the farms are going to be more efficient using potash than they have been in the last while.
Vanadium.
I'm very positive on vanadium, with one caveat. The vanadium market today is almost 100% levered to the use of vanadium in steel. But if we develop large-scale vanadium redox batteries for renewable energy production, the vanadium market is going to be very, very strong for a long time to come.
Oil.
Negative.
Lithium.
Neutral.
Metallurgic coal.
Neutral.
Cobalt.
Cobalt's a tough one. I would say bullish. I could go on for a long time about cobalt. I'm just going to say bullish. Yeah.
Natural gas.
Natural gas neutral. Neutral. It's a switch. It's a transition fuel, better than coal, but ultimately it will be phased out as we reduce our CO2 consumption and get more into renewables.
Rare earth elements.
Bullish.
And last, uranium.
I can only say neutral on uranium. I like nuclear power, but I think it's too expensive compared to where renewables are today, and therefore won't be a driving part of the new economy in terms of energy source.
Okay, and I'll have a follow-up on that in a moment, Ross. So we covered a lot of ground, very interesting, and really appreciate you running through that. So let's keep moving here. I want to move to cash, leverage, and capital allocation. First, can you tell us the importance of having cash, and when does it make sense to leverage up using debt?
This is, again, a question where you have many different kinds of answers. And so the big answer there is it depends. Depends on what kind of business you're in. As you know, I've been both in the mining industry and also the renewable energy industry. So in the mining industry, it's good to have a lot of cash, and it's bad to have a lot of debt. Why? Because markets can turn on you overnight with nothing you can do about them. If you get a bear market in metals, you're going to be losing money, and there's nothing like having a lot of cash that makes you stronger than your neighbors and able to be opportunistic to build your business in those tough times. If you have a lot of debt, you have significant risk of going bankrupt. So mining companies shouldn't have a lot of debt at any time. But I have to say, when markets are tough, if you can borrow and sustain interest payments and debt repayments with, say, cash flow at the bottom of market, then you will be in great shape when markets turn, metal prices go up, your stock price goes up, because when you want to finance with equity by selling shares to raise capital is when your stock is at a high price. And that always happens when you have good times. For example, last year in Equinox Gold, we borrowed heavily when the gold price was low and we were just kind of getting going. We had a very low share price. We borrowed heavily to build a mine because I knew that when that mine was running well, I was also hoping the gold price was going to go up, which it has. And I knew when that mine was running well, our stock price would be higher and we would be able to repay some of that debt by selling equity at a much higher price and therefore much less dilution to shareholders. So that's the mining side. As much cash as you can have as little debt, generally speaking, there are exceptions, depends on the time. Renewable energy is a whole different game. Renewable energy or most forms of electricity generation, really you're a utility, and you have these long-term projects where you have long-term contracts. In our case, we had some contracts where we had 40-year contracts to sell our electricity. So we really knew very accurately how much electricity we were going to produce. And we had contracts, specific price contracts we knew in literally 40 years, where we borrowed for 40 years, we had energy contracts to sell for 40 years, and we could predict our profitability for that period. Well, when you have that kind of predictability, long-term debt, project finance long-term debt is a smart way to go. And we would actually borrow sometimes 100% of the cost of building those wind farms or hydro projects because they generated this long-term stream of cash that just didn't have the cyclical variability the mining industry has. And so, we were able to get a lot of exposure to a lot of projects by borrowing with very little use of equity, which is our most precious and high-cost commodity in that company. And so it was the exact opposite endpoint to mining, where you want to pile on the debt and get exposure to all kinds of projects, whereas mining, you want to minimize the use of debt, and especially in the earlier stage projects like exploration and feasibility stage.
Well, thank you for the insights on that, Ross. I want to move on to allocating your investing capital to this sector. How concentrated are you in terms of positions, and what allocation in rough percentage terms do you use for these positions?
Well, Andrew, I mean, this is my business. I am very familiar with the risks and the numbers, and I can read a resource report really well. I mean, it's what I've been all over the world. I've been to hundreds of mines. I just know the game intimately. So I've always done best in things that I know most about. And I really have to say I focus 100% of my investing in this resource space because it's done so well for me. I don't know much about oil and gas. I don't know much about tech of any kind. I don't know anything about real estate. So I just don't get into those things. And I'm not the average person though, because I have lived this business so much and I can really assess good and bad and ugly in this one little box. But that most people aren't like that. They're generalists and they kind of have to look at this business as one box of many that they look at. So I'm not a very good person to make any kind of general statements for the average investor. It's just what's worked for me. And inside my box, the thing that I've always done very best on is investing in my own companies. They've always done best because I invest in my own stuff mostly, and it's the stuff I work on. And I know the people helping me, and I know the projects, and they've always done best. And that includes the renewable energy game that I invested exclusively actually in Altera that actually turned out pretty well.
Ross, what do you look at when you decide to write a check for someone in this natural resource sector? Are you settled with the people who can do in this business, or are you still on the lookout for new potential stars in this sector?
I've gone through phases, Andrew, where I've been my own developer. I put all my money in my own stuff. And then I segued out for a while and became an investor looking at other people's projects. And then right now I'm back into my own thing, investing in Lumina Gold, Luminex, Equinox Gold, and Pan American almost exclusively. So when I was an investor, I was looking at the usual things that people should look at: the quality of management, the quality of the project, how much cash they had, what their aspirations were, and how achievable they were, and generally speaking, the risk envelope around the project that they were promoting, the country, the location, the size, the need for capital. All of those things are important to making an investment decision. And on the whole, it's worked out pretty well for me. Plus, of course, the commodity. You have to get your commodity right.
How should an investor approach buying assets that are either in production or near production versus buying optionality type plays like undeveloped deposits that are out of the money? How do you think an investor should look at that?
The optionality plays are great if you're buying at the very bottom of the market. I had a couple of my first silver company, Pan American, was like that in the early days. I had a copper business that was like that. They just made out like gangbusters when the copper price and the silver price rose. If you have a lot of ounces, even though they're uneconomic at a low gold price, that company is going to be worth a lot if the gold price rises, as long as the project's real. But at the wrong time in the cycle, that's a terrible strategy because you need to make that strategy work. You need to have the metal price go up. If you buy those companies when the metal price is high, it's a very high risk situation, and I think a failing strategy. Then you move on to the more exploration plays, and if you invest in an exploration play, it had better be a good one, because you only have one successful play out of maybe 1,000. But when you have a successful one, it's great because you have this fabulous run that repeatedly has generated returns of 10x, 20x, 30x from initial investments. High risk, but very high reward if it works. But you'd better get it right because 9 out of 10 or 99 out of 100 actually, you might invest $1 and it might go to 10 cents. So that's high risk, high return stuff. Wonderful run, so that's the real value adding part of the business. But development plays are different. If you buy a development play that's already had a big run, then usually the share price suffers and you don't have much joy on the capital gain side until it actually, one of two things happens. Either the project is put into production, that is occasionally successful, or alternatively, the company is actually bought by somebody else. And then you have a happy ending when a larger company will buy that project and you'll have an opportunity to sell when all shareholders sell. And that's for a project that's really successful. So those again are fairly rare, but they are not uncommon. And I've certainly had more than my share of happy endings with companies I've invested in, because I've tried to focus on those kind of companies in the development stage that will be bought out by large companies. And then moving up to the producing companies, again, much lower risk, but not as high return potential, because usually they're pretty well valued. Again, you have to look at a lot of details of the companies, the diversification they have, the stability of management, stability of balance sheet, of the quality of the projects, the location of the projects. All of those things factor into how well that company is going to do, but they're much lower risk buying a company that's already producing.
And Ross, following on with gold, what are your expectations for the gold price going out over the next few years? And with that likely price increase, how do you see acquisitions to feed that growth you have planned for some of the ventures you are involved with? Do you see that there is still time for these targets at low prices?
Today is a funny time in the market, actually. It's quite an unusual time in my investing experience, because you have a very different world of investors. You don't have the high risk early stage investors like you used to have, 20 years ago, even 10 years ago. So even though the metal price, like gold, let's just look at gold, for example. Even though the gold price is actually pretty good today, the value of the junior market is really beat up. And that's because a lot of investors that used to invest in those companies just aren't there today. You have a lot more people putting the money into ETFs. You have a lot of fund investment that is run by robots that don't have any interest in looking at value or exploration potential or any of that stuff. And they just don't go down market into these juniors. So the juniors are really lacking investment capital today. And there's some really great value opportunities in a bunch of junior companies, and junior explorers, junior developers, and junior producers. It's just where the market seems to be today. And it's quite anomalous in my investment experience. But, on the whole, when you have a time like we've had where gold has gone up, $400 an ounce, a little bit more than that in the last 5 years, you'd expect these companies to be worth a lot more, and they're not. So I sort of see today being a pretty good investment world for those investors interested in this side of the market. It's a good time. There's good opportunity. And I think that will continue to present good opportunities for capital gains for investors over the next, say, 2 or 3 years.
Ross, I wanted to ask you also with regards to the growth strategy at current gold prices, and I believe this is kind of related to Equinox. Do you still see that there are some good prices out there for assets that companies that are looking to grow, like Equinox with big growth ambitions, would be looking still to purchase at good prices?
Yes, thank heavens, I think there are. And it's to some degree related to my answer to the last question, that there's a market today where investors just aren't pricing these small gold producers and small gold explorers and developers, the way they might have a few years ago. The gold price has gone up a lot, but the share prices haven't. So that's a good opportunity both for investors and for potential acquirers like Equinox Gold. Equinox has got a very ambitious mission of trying to become a 1 million ounce gold producer in the next few years. The only way it's going to get there is by developing its existing assets and by buying new ones. And so we are acquisitive, and we are quite frankly, I'm very pleased that, valuations are lower than I might have expected them, because that presents a great opportunity for us.
Now, Ross, as you know, any savvy investor out there can do some basic research and come up with a number of equity names that you've backed with the Beaty stamp of approval. I want to run through, not all of them, but I want to run through a few of them and just get your brief insights as to why you got involved. And I want to start with ARCA Gold.
Okay, well, ARCA Gold is run by a friend of mine, Rick Clark, so you've got a thumbs up on management. He's a very smart guy. He's done really well for shareholders in the past. It's got a very good group of investors. Lucas Landin is the largest shareholder. Lucas is a smart guy. He invests in good things. You have a really great project. A good project. I'm not going to say it's world class, but it's a pretty darn good one. I've been to Sudan myself. I've seen it, and I like the project. It's got an opportunity for a happy ending, I think, with the sale to a larger company at some point in the cycle. The knock on ARCA, of course, is its location. Sudan is not exactly New York, and it's got a reputation for being a tough place to work. Probably doesn't deserve it really, but it's got a reputation. It's had some civil unrest. It had a dictator for many years. It had a civil war. All those things scare away investors, and the result of that is the stock's really, really cheap. I like cheap. I don't like cheap if it goes to zero, but I don't think ARCA will. I think it'll be bought out at some point in the next couple of years, and in the meantime, I think you can trust management and know that they're trying to work for shareholders.
Agreed. Next one, Atlantis Gold.
Oh, well, Galantis is a footnote for me. I bought Galantis because I thought that I had a big stake in Dalradian right next door, and I thought Dalradian would buy it because I just thought that would happen, and they didn't do it. So I was wrong, and my investment thesis for owning Galantis doesn't exist any longer. I can't sell it because it's illiquid, so I'm just stuck with it. It was a mistake I made, and that's the way it goes.
Amerigo Resources.
Amerigo, again, a real nice copper play in a stable place, more or less stable anyway. In Chile, it's a kind of an annuity because all they do is they extract copper from the waste stream of a huge underground mine that's run by Codelco, El Teniente, and I think it's very low risk. I got in very, very cheaply. It's been, for me, a real home run. I've recovered my original investment, 5 or 10 times over already. So the rest of the stock I've got is free, and I'm just going to hold on to it for the long term. I like the company, and I think it's going to do well.
Ozino Resources.
Ozino is a case where I met the manager. I met the CEO of that company before he started Ozino, and I was really impressed with him. I met him actually through my Ecuador involvement, and I really liked him. And Hayadon, his name is, and I just thought, well, anything this guy does is probably going to work out. And he offered me a big position in his company that he was just beginning, working in Namibia, which I know it's a nice country. And I just, you back people. Helped him with his early stage work, and it's worked out reasonably well so far. But it's a high risk company, and I don't know what's going to happen. As long as he does what he says he's going to do, that's all I care about. He tells me he's going to take my money and put it into exploration. So far, he's done that, and I back people like that. The project may be a dog ultimately. It may be an investment failure, but that's okay. That's why you give people this kind of money, and you hold your nose and hope it all works out. They don't always work out, but he's a really nice guy, and so far they've had early stage success, and I'm rooting for him.
North Arrow Minerals.
Same kind of thing. North Arrow was an exploration speculation up way up north in northern Canada as a diamond play. It's my first, almost my only diamond exploration project I've ever invested in, but it was super cheap, run by a nice guy. Ira Thomas actually got me into it. I like Ira. She knows diamonds a lot. And again, a pure exploration speculation that most of these don't work out. And so far, it's been very neutral. I can't say it's been a big win, but I'm there for the long term.
Condor Gold.
Condor Gold, a lot of these you're naming are things that I have big positions in because I haven't been able to get out of them, even though I might have wanted to. And the stuff that I have successfully got out of, you don't see, but there's been a lot of them that have been very happy stories. Condor has been a little frustrating because I kind of like the deposit. The price I got in at was fairly cheap, but it's been a little frustrating because the country's been a little topsy. There's been all sorts of social stress in Nicaragua, and the project has had some social problems. They had to move some people away, and it's been a little more complicated than I'd expected. The project is still good. The CEO isn't, I'm going to say, the most well thought of guy in the world, in England especially, where he lives. He's a decent guy. I don't mind him, but it just hasn't been a big win so far. We'll see what happens there. I'm going to hold reserve judgment on that one.
Thanks for working through the list here, Ross. Now, of course, no need to mention Pan American Silver, which, of course, is an accomplishment of great proportions and is really the gold standard for the entire silver mining business. And, of course, we've already highlighted Lumina and Luminex, and, of course, Equinox Gold, obviously, are the big focuses that I've come across for what you're up to.
For sure.
Let's see here, Ross. I want to ask you just one follow-on. And I don't know if you've looked at the supply-demand fundamentals recently, but have you examined your position on the uranium mining sector? If you have a view, what is it? And if it's positive, will you be looking to finance any existing uranium jockeys to express your view?
Thank you, Andrew. And I don't know if I need to remind listeners if they heard this last segment that I talked about my views on nuclear power and development, and I'm very I'm kind of frustrated because nuclear power, it's clean, It's relatively green. It has no CO2 emissions. It's a base load power source, so it should be a real solution for a lot of the world that doesn't have good renewable energy. The problem with nuclear electricity generation is it's super expensive. It's really, really, really expensive because you have to protect the whole system from the radioactivity that's emitted when you generate electricity. So that expense means it just can't compete today against natural gas and coal in some places where coal is still being generated, and of course renewable energy, which is getting cheaper and cheaper all the time. So because the power production, which is the biggest market for uranium, is challenged, I have to think that uranium mining is going to be challenged. And we've seen that in the last 5 years. We've seen uranium prices come down, uranium producers throttle back production, and I don't see that turning, unfortunately. I wish I could say differently, but I don't see it turning in. And the result of that is uranium is likely to be stressed for quite a long time. I think uranium prices and uranium companies are going to be stressed. I'm sorry about that because Canada has some of the biggest uranium deposits in the world and some wonderful companies and tremendous, great discoveries in the Athabasca Basin. But that's just my view.
Ross, so we're always on the lookout for talented referrals in this sector. Are there any key people in the natural resource sector that you think the audience should pay attention to, obviously besides yourself?
Well, I'm not a talented young guy anymore. I'm an old fart. There's a bunch of people, Andrew. There's a bunch of young guys in the business. I mean, we've got a young guy, Scott Hicks, who's a really good guy. He's got a great future. He works with us in Lumina and Luminex. He's got a little vanadium company going called Strategic Resources that he's working real hard on. There's a bunch out there. Nolan Watson comes to mind. Ivan Bayback comes to mind. People like that. They work hard. They're honest. They're driven. Those are guys like I used to think I was, 30, 40 years ago. And they're worth supporting. They're smart guys and they're going to do well.
Well, Russ, we've come to the end and it looks like we're out of time. Is there any parting insights for the audience?
No, this is your party, Andrew. It's I'm responsive, not creative here. I'm more than happy to provide my thoughts to specific questions. But well, if I was going to say anything at the end, I'd say I wish everyone well. It's a very, very fun business. It's a lot of profits for a lot of people at the right time of the cycle. It's a terrible, terrible business at the wrong kind of the cycle, and people just lose their shirts. But boy, oh boy, if you get in there at the right time and you pick the right companies, it's a heck of a way to build a retirement fund. I can say that as both an investor and as a developer of my own companies. For me, it's been a great career and a lot of fun, and I really couldn't have done it without, the whole pantheon of support teams from both management, all the people I've worked with, and a heck of a lot of great investors who've been part of every one of my companies from the get-go. I couldn't have done it without them. They've backed me and supported me and given me capital, and I just have to give them all my thanks too. It's like being in a family. You've got to work together to have success. And I really feel that for me, it's been a massive effort by an awful lot of people to have made me look good. And I'm happy to take my success on behalf of so many people. And I'm very happy that to some degree, since all my success has come from public companies, if I've done well, a lot of other people have done well too. And so it's been a real nice ride.
Well, Ross, thank you for the insights and for sharing your wisdom with us. It is much appreciated. Best of luck in all your ventures, and we'll talk again soon.
You bet, Andrew. Thank you very much. It's been a pleasure.